Hey everyone, welcome back to another roundtable discussion. My name is Adam. I'm the editor of The Fifth Person. And today I have with me Rusmin.
Hi everyone.
Victor.
Hi.
And they are the co-founders of The Fifth Person. And we have our lead analyst today as well, Kenny.
Hello.
So welcome and thank you for joining us. So at this roundtable discussion today, we're going to talk about the upcoming IPO of Ant Group or Ant Financial. So this is going to be the biggest IPO in history. So this is going to be really exciting for many investors, and we want to discuss, at this roundtable discussion, what this company is all about, what potential they have, and whether this IPO is actually, something that we investors should be interested in. All right, so let's just dive right in and ask, what is Ant Group all about? So I think all of us will be very familiar with Alipay or WeChat Pay in China. So this is a huge industry in the Middle Kingdom, right? So tell us a bit more, about what Ant Group is and what they do with their business.
Okay, so Ant Financial really reminded me a lot about PayPal, right? How they started is simply just to gain trust, because back then there were a lot of frauds, right? They have already paid out the money, but they didn't receive the items. So the thing with Ant Financial is they acted as an escrow account. So once they're sure that when they receive the products, and that's when Ant Group will release the funds to the merchants, basically. So this is basically what Alipay is all about.
This is what happened because of Alibaba. I think all of us are familiar with Alibaba, right? It's a place where people can basically sell stuff online in China, and because of that, they needed some way of transferring money to each other that everyone could trust. So yes. That's what Alipay is all about. That's how it came about in the first place.
Yep. And I think in the past, China, they don't really have a good penetration in terms of credit card, not like what we have in Singapore. But in China, in the past, they still like to make payment through cash. So the only way for Alibaba to become successful is they have to create this electronic payment, where they created Alipay to solve this issue between the seller and the buyer. Essentially, this is a trust business, right? If I buy something online, I don't want to be scared that I purchased something and the item wasn't delivered. Okay, so this is where Alipay comes in. If anyone actually buy the items on Taobao, for example, or AliExpress, they have this technology behind to make this transaction possible. Right? Okay, so that is essentially the Alipay. Okay, so as of 30th of June 2020, the number of users on Alipay platform actually has grown to about close to 1 billion, right, yearly active users.
I feel like their growth strategy is similar to PayPal. What PayPal did was leverage off their eBay platform, and from there they expand out locally in the US, then after that into foreign countries. I guess that's what Alipay is trying to do. They have leverage on the Alibaba platform, and also because they have many things within the Alibaba business, right? They have Youku, they have Fresh Hippo, anything that they touch, they will definitely let them use Alipay as the preferred payment method. So that's how they will
for those who have been to China, I think Victor can perhaps share the story of where go to China. You probably have.
What's it like? Going to China and using all these things.
So many years ago, I think about 2 or 3 years ago, I went to China with my wife. My wife goes to China for her clothes sourcing, and I think that was our second time first time in China also, at Guangzhou. Okay. And when I was there, right, I basically changed most of my money in cash, and I bring extra credit card just in case I finish my cash, right, I can use my credit card. So when I go to the restaurant to eat, right, the first thing I thought is, okay, don't use the cash in case I run out of cash. So I want to use the credit card. Then after that, when we realized that they don't accept our Visa or Masters in China, so they only accept UnionPay, Alipay, or WeChat Pay. So my whole trip in China, right, I have to keep using cash, and we really run very low in cash, and I have to really, think of ways not to try not to use the cash that much, and use it slower, Okay. So that was a very eye-opening experience.
Kind of like a culture shock.
Yeah. So when I was going at the store, right, I go to one of their stores for lunch, and the waiter actually asked us to use the WeChat to scan the QR code, and after that you pay from there. We say that we do not have WeChat. Then the waiters was like, huh? You do not have WeChat?
Are you Chinese?
Yeah. It's like I do not how to reply him,
China is a land of QR code. Yeah. Anywhere that you go, you want to purchase anything, you need to make payment using your Alipay or WePay.
And this was when? This is maybe 3 years ago.
3 years ago, and when they collect cash, they were like, Like that.
So
That was the expression that
So
they gave me.
they didn't even want to handle the cash.
Yes, correct. Yeah. It was like a hassle to handle cash in China.
And this was 3 years ago, so you can imagine what it is now. I mean,
Yeah.
if you went there, and even for not just like, I mean, you could say like Kenny was saying, maybe for PayPal.
Yep.
You use PayPal for internet transactions, buying stuff online. But in China, it's gone into basically everywhere. Even if you go to a restaurant, you don't pay cash. You don't use your credit cards. You use something like Alipay or WeChat Pay,
Yeah.
and that's the level of penetration that they have in China. And this is, as like Rusman was saying, they have 1 trillion users on Alipay. I mean, 1 trillion is a lot.
1 billion.
1 trillion.
1 trillion is a tremendous business. 1 billion users in
And
China.
they have about close to 80 million merchants. So essentially
Okay.
they cover the whole of China. So if you go to any shop, any restaurant in China, you have to make payment either using Alipay or WePay, which is
Okay.
a very popular payment there in China. It's almost like a Visa and Master, which is very popular to us, right? But in
Yeah.
China, WePay and Alipay is probably the most common part
Yeah.
of the transaction over there, aside from the
Yeah.
UnionPay. Again, UnionPay, they only handle debit card and credit card. The penetration for credit card in China is very, very low,
Yeah.
at about 20 over percent.
I think the stats here shows that the latest stats by Oliver Wyman is about 75% of the people in China do not have credit card.
Yeah. So most of them don't use credit cards, not even a UnionPay. So, but the penetration rate for Alipay and WeChat Pay is, I'm
lot
sure,
higher.
much higher than that,
Yeah.
right?
And in terms of mobile cashless transaction, Alipay and WeChat Pay, or we call it Tenpay because QQ Pay is also part of Tenpay, they actually dominate more than 50% market share in terms of cashless transaction. And if you look at this 7 years ago, there was only UnionPay, right? They are the only players in the market. But because of this mobile 4G revolution that took place, Chinese users actually get very comfortable using smartphone to do transactions on the internet, and that
They even
actually has
send,
a
like,
huge boom.
Even Chinese New Year, they even send like red packets.
Yeah.
Using WeChat or Alipay, right?
Yeah.
Yeah.
So the two of these players actually accounts more than 80% already.
So
Their
the
third
duopoly.
largest player accounts 1.5% of the market share.
it's
So you can
basically-
expect actually these two players only.
It's a duopoly in a
Yeah.
sense.
Duopoly market, yeah.
So this is basically, so this is why so many people are basically hyped up about this Ant's IPO, because Alipay is basically everywhere in China, and in China, I mean, China is a huge country, 1 billion people. So I think I can understand why people are so interested in the IPO.
And in fact, the mobile payment, they are number one, is at 55.4% based on their first Q 2020 standing, right? And WeChat is about 38.8% market share.
Is there any reason why people in China they never really took to credit cards and they just decided to use Alipay or WeChat Pay? Because is there a difference between using Alipay and a UnionPay? Is there a difference in the way it's done?
Yeah, for Chinese, I think they generally don't like to borrow money, right? They and to get a credit card,
okay.
I think generally it's a lot harder to apply one in China. That's why the penetration is still very low. There are many other reasons, but when it comes to Alipay, there are a lot of good reasons to use them. One is that the merchants, as a merchant, if you take Alipay as a payment, you only have to pay 0.6% of the transaction amount to the Alipay versus a debit card that typically you have to pay, let's say UnionPay 1%, or sometimes you can go up to as high as 2% if it's a credit card, right?
Okay.
So that's why it makes a lot of sense for merchant to encourage the users to make payment through Alipay, right? Because the fees are a lot lower.
So it's cheaper for businesses, and at the same time, it's different from a credit card. Because with a credit card, you're basically borrowing money, right?
Yeah.
You need to pay for something. But Alipay is kind of like an e-wallet. It's actually your own money. You put it into the app, and then that's your cash, and then you use that to pay wherever you shop. And then because of that, the money is already there. It's a lot cheaper.
Yeah, but I also think another thing is because it's not only just for payment. There's also a lot of other things inside the whole ecosystem which make it more sticky. Right?
Yeah, it's a super app, right? It's an app where you can do a lot of things. You can book a taxi, you can rent a bicycle using the app, right? And you can do many other things. You can make payment. And of course, Alipay become very popular also because of the Alibaba, right? The sponsor, the parent company, where a lot of people started to shop online. In fact, e-commerce as a percentage of the total retail in China now accounted more than 30% of the total retail sales, which is huge in China. And I think users, or rather customers, actually get very comfortable using Alipay because when they shop online, they have to use Alipay, and now they go to the offline store, they also accept Alipay. So everyone started to use Alipay, and that becomes it's just become a norm in China.
Actually, it's quite surprised that you say the figure of 30% is way higher than the US of 16% in
Yeah.
2019.
Okay,
Yeah.
so basically the Chinese are just a lot more comfortable with
Yeah.
using online digitization for the way they pay and the way they shop.
Yeah.
It's just part of their lives. It's like their habit, and that's incredible in a country of 1 billion people, or 1.3 actually.
Yeah.
That so many people are just so hooked up to the internet in a way.
Yep.
Yeah. In terms of number of monthly active users, for Chinese users currently account more than 800 million active users, which is a lot.
So actually, there's still some room for growth, right? I mean,
Yep.
Yeah.
1.3 billion people in China,
Yeah.
and as of now, so they still have some way to go. And what's the mobile penetration rate?
It's
in
about
China?
63%.
63%.
Yeah.
So not everyone in China owns a
Yeah.
smartphone or mobile phone. I'm not sure.
Mobile internet user penetration rate.
Oh, okay. So there's still some runway
Yeah.
within China
Yeah.
itself.
To give us perspective, US is actually 81%.
Okay.
Yeah.
So there's still some way before it reaches like a developed status like the US.
Yeah.
I think maybe in like Korea, which is super connected, is even higher than that.
Yeah.
So if China even gets to the level, there's the potential for Alipay within China is still tremendous. The runway is still pretty long for something like that.
Yep.
Yeah. And are they also looking to expand outside of China for Alipay?
Yes, they are, but I think most of the expansions mainly for the reach for the Chinese customers who are going overseas, traveling outside of China. So they still try to reach out to those stores that are outside of China, and hopefully that they can accept Alipay. So it make more convenient for Chinese
tourists.
to make transaction with outside of China.
Actually, you can see that in some of the Singapore stores, they really accept Alipay
yes,
and
yeah.
WeChat Pay payment system.
Yeah. And Chinese tourists, they can really spend, and a lot of stores will be more than happy to accept them, right? If you have Chinese tourists coming over.
That's actually quite a brilliant strategy because we all know Chinese tourists are everywhere.
Yep.
I was in Germany, I think last December, and Germany, right? So
Yeah.
I was at I think the Neuschwanstein Castle. It was just full of Chinese tourists. So I mean they're everywhere, but this is a brilliant strategy where if the Chinese tourists are just going everywhere around the world, and of course merchants, businesses everywhere want the Chinese dollar, right?
Yeah.
Or the Chinese renminbi. And if you have Alipay everywhere around the world, there's a way of like getting penetration elsewhere. And then that could be a way to get even retail people, like customers, to start using that e-wallet as well. There could be potential for that in some ways.
Yep.
Yeah.
So I mean, I think the growth for Alipay is definitely there just in China alone. But is there any, Ant isn't just Alipay, they have other business segments as well. So tell us a bit more about the other business segments that they have.
Actually, just Alipay itself contribute about 1/3 of the business, the entire revenue. So the rest of the 2/3 actually made up of other businesses. I think maybe Victor can share.
Yeah, so like Rusmin say, the digital payment is actually 1/3 of the business, but it used to be more than 50% of the business.
Okay.
But along the years, right, there are other business segments because they build a whole ecosystem into a network effect that they becomes like a distribution channel. So in the end, they start to branch out into other types of business that can offer inside their platform, which is these three main segments. Which is first one we call it credit tech, which is microfinancing. Second one we call it investment tech, which is more of like selling financial products. And last we call it InsureTech, which is more insurance type of business. So to give a rough overview, right, the credit tech is basically microfinancing. So they lend out money to people who are underserved. Okay, and how do they make money is that they will connect between these people, right, on their platform with the financial institution. Okay, so they link them up, and whatever loan that the financial institution, right, approve and lend to their platform user, right, based on the interest income, right, they will get a percentage of it, and they call it technological fee. Okay. Then when it comes to the investment tech, it's based on the financial products that is sold to their platform user, and they get a percentage of the asset under management. In short, we call it AUM.
Okay.
And for the insurance tech, basically is they sell insurance premium, and they will get a percentage of the insurance premium. And all these they call it technological fee, right? So that's the whole overall of how they actually make money.
So basically, I wouldn't say Alipay, but basically Alipay, the
Yep.
app, has built a distribution network.
Correct.
There's just like all over China, and now they're leveraging on this network
Yeah.
to basically connect other aspects of the financial world
Yep.
with their entire user base.
Correct.
So that, like you say, now they're doing loans,
Yeah.
they're doing insurance as well.
Yeah.
So there's a lot of potential in other areas
Yeah.
as well. Because I was pretty surprised by that. That the fact that even how big Alipay is, it only contributes 1/3 of the revenue
Yeah.
for Ant.
Yep.
So that means the other groups are
Yeah.
generate so much
I
more
think
revenue.
the
as well.
amount of data that they collect, right, have really give them a lot of advantage in how they actually can branch out to other business. And I think Rusmin got more insights on how they actually use the data on to run in all this credit tech kind of business, right?
Yeah, okay, so for the credit tech business, this is actually made up about 40% of the revenue. In fact,
Yep.
it's the biggest now.
Okay.
It has overtaken the payment side. And for the credit tech business, I think essentially they have two divisions where one is they serve to the consumers, probably those Alipay users,
Yep.
and the other one is to the medium businesses, right, in terms of the loans. Okay,
Yeah, so
for-
the loan, I think
yeah.
the loan is about 1.7 trillion for the consumer and 0.4 trillion for the
Yeah.
small businesses.
And this is in renminbi.
Yeah,
Yes,
renminbi.
renminbi, yeah. So if you look at the consumer loans, actually the equivalent version of it, you can call it the credit card version of the Alipay, right? So essentially the Alipay users can actually so-called spend, they call it Huapi, right? Basically where consumer can just they have to apply for it, of course, and then they will have a credit limit that will set to them once they get approved, and essentially they can use that credit limit to spend on buying items on Taobao on credit.
Okay.
Yeah, and of course they have up to 45 days the interest fees before they actually the interest start to kick in. So it's almost like a credit card, except that you don't have the card itself. You are using your mobile as your virtual credit card. Right? And this is really very popular in China because they have this credit system where credit score. I mean, if the users themselves that they have a good credit history, they have a stable job, they have information uploaded into the system like their assets, businesses, how
Or
much
they're
they earn.
pro-government. Stuff.
Yeah. So essentially, their credit system will go up as high as 700, 800, and the higher it goes, the
Okay.
better their credit profile, and they can borrow money at a much lower interest
It's kind of like the
rate.
FICO
Yeah.
score in
It's
the
kind of like
US,
FICO score, yeah.
right?
And so that is one part of the business, and the other one is the J-Pay business, which is J basically borrow, right? So it's almost like a cash credit where you can borrow cash from the credit company, and they will straight away give you cash almost an instant, right? And then you can use the money to purchase whatever the items that you want. Okay, so but the interest will start to count on a day-to-day basis. It's not like a credit card.
So you can see this segment of the business almost like a Visa and MasterCard, right?
yeah,
Because
okay.
Alipay is the largest, so they would probably be the Visa, and then we pay would be like the MasterCard, right? So with this is what their advantage is, because they're serving this underserved market, right? They have the advantage of having data, doing risk management. So what they do is they collect this data because they know how much money you're making and how much money you're spending, and basically your spending behavior and how risky is that, so they can come up with a personalized so-called interest rates per person or how much credit limit they will allow you, and they will provide this data to the financial institutions, basically banks. So
They work with 100 over banks in China.
So
Yeah.
Ant doesn't lend the money itself.
Yeah,
it just
correct.
connects
Yeah.
with other
Yeah.
lending institutions.
Yeah, to,
Yes.
to put into perspective, right, actually they do not want to use their balance sheet or provide any guarantee. So actually, based on the credit balance, right, 98% of them is all under their financial partners. Only 2% of them is handled by themselves.
So you just see that as a platform
So intermediary,
business,
right?
intermediaries. Yeah.
It's like a platform
Yeah.
basically.
Yeah.
Yeah.
So they connect the users that they have on Alipay that they built up over these many years.
Yeah.
Connect them with now all the banks and lending institutions, because they have, like Kenny was saying, the data advantage.
Yep.
They
Yes.
understand the user so much better.
Yeah.
They know how they spend, what
Yeah.
they spend on, everything about them. So they have a model or algorithm that allows
Yeah.
them to kind of decide how credit worthy a user is,
Yeah.
and then extend a suitable amount of credit if they want to.
Yes, correct.
Which so
I think they will
yeah.
pass this data to the financial partners, and the financial
Okay.
partners, based on this data, evaluate the loan before telling them whether they approve what amount of loans and what's the interest of the loan.
Okay.
So yeah, in a way you can see it as MasterCard and Visa, except without the physical card. You just
Yeah.
extending
Yeah.
loans from them, the banks, through the basically phone the app, and then
Okay.
you can
So,
use.
so China is very unique in their way. I mean, they don't really use a lot of credit card,
Yeah.
but they
So
use
they-
Alipay as a credit card.
It's their own ecosystem
It's
in
their
a
own
sense.
ecosystem.
And they can use this to spend on whatever they want.
Yeah,
In a
but
way.
of course there's always a credit limit depending
Yeah.
on their credit rating, what is the score that they have. Yeah, some user with a very bad score, of course they can't even borrow money at all.
Okay.
Yeah.
So what is the growth potential like for this particular business segment?
So if you were to look at this credit past 2017 to 2019 growth, right, is compound annual growth rate is about 60.9%
Wow.
based on the revenue, okay?
Okay.
But based on the first half, right, they have grown by 59%.
So first half of 2020 this year.
Yes, correct.
Yeah.
Okay. So it's about a 60%.
Yeah.
So it's
Annual
still a
growth
very
rate.
young industry
Yeah.
actually,
Okay.
consumer financing.
Yeah.
Yeah,
I think it's an underserved industry, right? Because firstly, the amount they loan is much lesser, but the yield they get, the interest they get is much higher, right? And also when they loan to the business, right? The business, some business they don't want to loan a lot of money. They want to loan about maybe 500,000 RMB and lesser.
Okay.
And there's an increasing trend in this group of small businesses that want to loan 500,000 RMB and lesser.
Okay.
Yeah. And of course, there's one more part where they also lend out the loans to those small business companies. This is actually contribute about 20% of their loan value that they have. Okay, so and they also have a licensed bank, which of course they are not a majority shareholder. They own about 30% stake in this MY Bank, where they just serve mainly small business, medium businesses, right? And the thing about this company is that the My Bank, and they have this 310 format, right? You take 3 minutes to apply, 1 second to get a decision whether you get a loan or not, and there's zero human intervention, right? So basically, this is a fully automated kind of bank that you're looking at, right? So it's super lean to operate. Yeah, and the interest rate can be as low as 3.65.
Yeah.
I mean, in China, this is considered quite low.
Yeah. So that is the 2% that we are talking about that is under their balance sheet.
Okay.
Yeah.
All right. So I mean the scale. I mean, if you, like you're saying 301, right? I think, I mean, if you want to serve 1 billion people in China and you're gonna, do it the traditional way, it's gonna take you a lot of investment. I mean, if you're gonna do like physical branches and all that stuff, but they found a way to basically just digitize everything,
Automate the whole
process, and still, do it in a very profitable way that doesn't allow them to take on too much risk.
It's a legit fintech.
This is a real fintech.
So one of the professors actually went to Ant Group, right? Then they went to see and said, how come you're not hiring a lot of people? They say, no, we just automate everything. They said they use the same group of people, they create an app, they automate it, and after that they will move on to another project. So that's why they're not hiring as much or as.
Wow, that's amazing. So I
I
mean, if you hear something like that, it's pretty amazing. But to hear it in a country of like a billion, 1.3 billion people, this is just incredible.
Huge potential.
It's huge potential, and like you were saying, this credit tech is basically still quite nascent in China because not many people borrow money yet, right?
Yeah.
So the potential for growth in this area is still even more than the payment system.
So basically, to put in perspective, in China, right, their consumer credit balance to their cash is about 14%.
Okay.
So if you go to look to the US, where they always borrowed money, right, that's about 33%.
So this ant is not really an ant. It's not the small ant that you're looking at. It's a big ant.
So I have no idea what they call it.
You know those Marvel Ant-Man?
Ant-Man became Giant Man. This is kind of different, but this is tremendous potential. This is just for credit tech.
Yes, correct.
Yeah.
So what about the other business segment that they have?
InvestmentTech.
InvestmentTech.
Okay, so basically, InvestmentTech, if you look into the whole China user, right, based on the stats, right, by Oliver Wyman, right, cash and deposit as a percentage of the personal investable assets, right, in China is about 58%. So 58% of the whole assets that can be invested is actually still in cash in China. So actually in China, a lot of people still don't know how to like invest in the right financial product.
Okay.
So they become the bridge, right, to introduce financial products to all these platform users that are using their platforms.
So I think before all this investment came in, actually for the investment tech, the one that actually got very popular is their Yebao, right, which is money market funds because Chinese traditionally they like to hold onto cash. I mean, you put your money on the digital wallet, Alipay, you are not getting any interest, right? So Ant Financial essentially came up with this innovative product. It was revolutionary at that point of time, where instead of putting the money just on a digital wallet, why not sweep that money into a money market fund where they call it 余额宝 and start to earn interest. It's almost like putting your money in the traditional bank where you earn the interest rate. Now you can earn a higher interest rate than the traditional bank, and because of this introduction, I think that blew up, it exploded in terms of popularity, and because the users can actually start to put the money as low as 1 renminbi, and they start to earn interest on a day-to-day basis, right? So it becomes very popular in China, and overnight they actually accumulated about close to 10 billion renminbi in terms of AUM, right? So, and then of course today they are a lot bigger. They are in size in terms of AUM is about 1.2 trillion for this 余额宝 itself.
To put the numbers right, the whole AUM for Alipay, for Ant Financial is about 4.1. So the 余额宝 is about, I think about close to 30%.
4.1 trillion.
4.1 trillion, yes.
Renminbi.
Yeah.
I mean, this is a really smart move as well. I mean, if you have all this money in an e-wallet, not doing anything, and you can just kind of like start a money market fund or even just connect it to another fund or whatever it is, people will just start putting the money there if they trust you, and they trust you because they've been using your services for so many years, and then it just kind of makes sense. If I wanted to do it, I would do it as well as a consumer.
They started these money market funds by themselves, but eventually as the demands was overwhelmingly huge and big, and they started to open up to a lot of mutual funds players to come in and then work together with them, and they just earn fees from the AUM that they have.
Wow. So really they're just leveraging on the same distribution. I mean, this platform that they built in China all these years. So this, how was the revenue contribution for this particular?
For InvestmentTech contributed about 15% of the revenue. So this is probably perhaps the third largest segment in the Ant Group itself.
So the largest would be credit tech, followed by payments, and then this is investment tech. But this is also growth in this segment because, like you were saying, the Chinese don't really, they're not as savvy when it comes to the financial markets and investments and all that. It's still a bit, a few years behind. But they're building on this area. And
but the investment tech past 2017 2019 has been growing about 27.1%, right? But their first half 2020 did very well. They grown up by 56%.
Wow! So that's tremendous growth as well. So I think as the Chinese population, they become more familiar with all these investment products. I mean, this is kind of the same thing that happened in any other country. I think in Singapore the same thing happened. We get more savvy with how we want to manage and invest our money, and the same thing's going to happen in China. And then Alipay, or Ant is right there just to leverage on the network that they have, and then they can just start, introducing so many things to all the entire user base.
And of course, the last part of the business is the InsureTech, which made up about 8% of the revenue.
It's the smallest, but I think it's also the one with the biggest potential, I would say, because I think China is like sort of turning into an aging population also. That's why the government actually relaxed the regulation for the one-child policy to two-child policy, right? Because they need to fill up the gap for the aging population. So if you look at the insurance penetration rate in China, is actually 4%.
Right. Oh, okay, that's really low.
Very low. If you look at US, it's about 11%. Japan, considered aging population, is 8%. Right. So actually, there's still underserved in terms of insurance, because I think only recent years, China have grown very fast, and they start to, I think, realize that insurance is very important. So I think this is going to be a very big growing segment for them, even though it's very small, but it's going to contribute significant segment, I think, in the future. But not right now, but it may take some time to happen. But if you look at the growth of insurance tech, right, 2017, 2019, right, their compound annual growth rate is actually 96.6%. Right, but they came from a low base. Right, they just introduced just a few years ago. But on the first half, growth is about 47%.
Okay.
Right. Yeah.
And so it's the same thing, right? As in they don't do their own insurance. They kind of connect it to the insurance providers, and this is basically they just provide the platform.
So they can actually choose up to more than 2,000 insurance products that cover life insurance, health insurance, accidents, mortgage, right? So, and they have this one insurance that's actually very popular. They call it 相互保, which is basically coverage of one of the 100 critical illness predetermined. If the buyer, and let's say they have 相互保 the insurance, right, and they contracted one of the critical illness, they can actually claim about 300,000 RMB, and they only need to pay average premium of around 29 RMB per year, which is about 3 RMB a month. And when they first launched it, they only charge about $1 RMB per month to get a critical illness insurance, right, which is really, really cheap. And this is the market where they actually target those low-income group earners, but it has gained a lot of popularity because now they have about 100 over million users that actually have this insurance, right? So it's probably the biggest in terms of insurance coverage.
Yeah. So if you look at the three segments, the credit tech, the investment tech, the InsureTech, right? These three segments, based on their online presence, right, their market position, right, in China is number one, the largest.
So they're number one. Every single segment.
Yes, these three segments.
Investment
and insurance, number one online. Yeah.
Wow. So basically, when this company goes public, you're going to invest. I mean, if you choose to invest, you're going to invest in basically the number one player in these respective industries, and these are growing industries, sunrise industries in China because of the way they're growing, and the way the population is geared for all these things at this point in time. So this is a lot of potential. We can all understand why this is so many people are interested.
There's so much buzz about this.
There's so much buzz about this, and why it's slated to be the biggest IPO of all time. So I think there's really a lot of interest in this. But I want to bring it back to the IPO now. So we know a bit. I think everyone here will be watching this discussion and all that. We kind of understand what Ant is. This Ant Group is all about, what they do in all the various different business segments. So let's talk about the IPO right now. It's expected to be at least, at over 200 billion. 200 billion or over, depends on what the demand is going to be like. So, and they plan to raise, that's the valuation, all right? So, and they plan to raise about around 30 billion or more from the IPO when they list in Shanghai and in Hong Kong. Right, so these are the two markets they're going for a dual listing at the same time. So, but before they want to list, I remember that Alipay used to belong to Alibaba, right?
Yeah.
So so how come? No, what happened here? Is Alibaba spinning off Ant, or is it's not that, right? It's kind of like an entity by itself, and then now it's going public and all that. But what happened? How come? What was the story behind that, and why is it listing and all that?
So because of the Chinese regulator, actually, in order for them to get the payment license, they are not allowed to be owned by foreign entities. But at the time, Alibaba was owned by Yahoo and SoftBank, right? China and the US.
Okay,
so they didn't want that. So then they just they spun the whole thing out. And then Jack Ma pretty much owned the whole thing from there, spun that out to Jack Ma. Jack Ma is basically the largest owner of the Ant Financial.
He doesn't own the whole thing.
He doesn't own the whole thing.
I mean, if he did, he's going to be even richer, even richer, right?
Yeah. But it caused a huge hoo-ha because shareholders were saying how can you just rip off something that you built within the company using the shareholder equity and just rip off after it's successful and everything. But of course they have their reasons. But of course there's a lot of speculations why he did it, and whether in the future there are risks of these kind of things happening again, right? But as a result of that, they actually own. They give them the right to own the 37.5% of the pre-tax profits of Ant Financial, and then they have the options to convert to equity. But in the past couple of years, a couple of years back, they actually converted to a 33% equity. So Alibaba effectively owned 1/3 of Ant Financial.
Okay, so Alibaba shareholders, from owning the whole thing in the past, now they own 33% of Ant Group.
Yes.
Doesn't seem like a good deal, but at least they still have something, right? So what do you think? Was it a fair thing that happened to Alibaba shareholders?
It was a sneaky deal.
I think it's fair if my name is Jack.
But I mean, it's a done deal, right? So there's nothing you can't do anything about it. And now, who are the other investors in the shareholders in Ant Group besides Alibaba at this point?
Usually there's a consortium of investors, basically people that he worked with. So, but of course they are also not really prominent figures. So
okay, but basically Jack is the biggest shareholder of this. Jack Ma. So he stands to gain a lot from this IPO.
Definitely.
Yeah. So I mean, it's going to be a big one. So now let's talk about the valuation. I mean, 200 billion valuation. It's a huge valuation, right? So do you think that valuation is overpriced? Is it too high, based on everything that we know about Ant Group at this point in time? What do you guys think?
Okay, so if you look at the first half 2020, right, profit attributed to the owner of parents about 21 billion renminbi. Okay, and if you look at 2019, right, it's about 16.9 billion renminbi. Okay, so basically their first half result is more than their full year result already. Okay, so that is one thing that we need to take note about. And if you base on just the first half result, analyze it, right, your P is about 30 over time. Okay, that is definitely very attractive.
That's actually very attractive.
Yes,
for
correct.
such a high growth.
Yeah, because if you look at their
company.
closest competitor, Tencent is about 40 over time, 45, 49.
Yeah.
At this
Okay.
point in time.
At this point in time,
okay.
yeah. So it's very attractive for something that's growing, like the revenues are growing at 50 over percent, right, on the growing segment, and it's 30 over percent. But if you dive down deeper, right, you realize that actually on the first half, right, there's a significant drop in their expenses.
Okay.
Firstly, of course, the business grow. Secondly is their gross profit margin actually increased significantly. Okay, so where I do not know why the gross profit margin increased significantly, because they didn't break down on that figure, but they did break down on the expenses. So the expenses also dropped down quite significant. Okay,
Could
so
be
if you
intentional.
see maybe
Because they
because
know
they want
they're gonna
IPO,
IPO, right? Yeah.
right? So the first thing that if you look into their selling and marketing expense, right, under their promotion and advertising expense, right, if you look at first half 2019, right, they spent about 9.6 billion. And if you look at 2020 first half, right, they only spent about 4.9 billion. So that's about 49% drop in their promotion and advertising expenses. Okay, so the reason they said that is because in 2018, right, they said that they spent a lot of money, right, to do the promotion and advertising. So that's why they cut down on the promotion and advertising.
Okay.
And also because of recently COVID, so they cut it down. So whether they will increase back this promotion, right, and advertising, right, after the IPO is still a question mark. Okay, so this is the first thing. Second thing is, if you look under their general administrative expense, right, there's a figure about 1.3 billion, right, in 2019 that they call it royalty and service payment. In 2020, right, they say that okay, this thing is no longer down there, so they already reduced.
Okay, so the
to
expenses
zero.
go down again.
1.3 billion zero.
Okay.
That's only first half. But if you look at the past 2017, 2018, 2019, the full year, right, the royalty and service payment for 2017 is about 4.8 billion. 2018 was a low figure, about 251 million, but 2019 was about 3.5 billion.
Okay.
Right, yeah.
So basically what you're saying is that if you take a look at the first half 2020 financials, Ant's profit looks really good.
Yep.
It's really high because what you're saying is that the expenses were cut down by quite a bit.
Yep.
So that's why the you said the first half of 2020 is already more than the full year of 2019.
Yep.
So because of that, it kind of looks like
Very attractive.
Very attractive.
Yep.
Earning a lot of profit.
Yeah,
But you're not sure whether these expenses will actually come back
correct.
down the line.
Yes.
And then of course your profit will
Yeah.
go down. But of course there's still revenue growth and all that.
Yeah.
So but you're saying that this profit may be a bit optimistic
Yes,
in the
correct.
first half of 2020.
I think if you want to be more conservative, right, you use the 2019 figure.
The full year of 2019.
Yeah, so if you use the 2019 figure, their P is about 79.7 times.
So it's a lot higher now.
A lot higher than Tencent,
Yeah,
right?
okay.
So, but if you look at their 2017, 2019 profit growth, right, it's about 56%,
Okay.
right? So if you think about it, 79, about it's, let's say round up to 80 times, and they are growing at 56%, they just need 2 years to cover up that. So it's still quite attractive in terms of the growth that they are showing you, right? If they don't have, if the growth is not there, right, probably I think it's going to be expensive. But the problem is, the good thing is not the problem.
It's not a problem at all.
Okay, the good thing is that the growth is 50%. So if you look in terms of the revenue of the up and coming segment, the credit tech, the investment tech, the insurance tech, they are all growing at minimum 40% and above, right? So that is in revenues, not in profit, right?
But I think if you just read from the news, what they'll be telling you is that, the PE is only like 30 times. You base it on the rolling PE. So it sounds like a very attractive valuation. But after Victor actually dived deep into all the breakdowns, and then you realize that, actually, the profit could be lower, right? That's what we are actually seeing.
Actually,
so this is something that you might want to take note.
Okay.
Actually, profit could be slightly lower, but I can say this from experience because of analyzing Amazon, because I think they have also probably benefited from the COVID-19 because a lot of people are shopping online and a lot of people need to borrow more money, but not that they are growing that much slower, but they are actually growing faster. But this one is even faster because of the need. And then of course, who needs to really advertise on this platform when you really need it in this time? So then they just cut it off, and it looks really good. And probably this is why they choose to IPO at this time probably
Perfect timing.
could be the
Yeah,
reason. Yeah, the
correct.
perfect timing with an increase in profit and growth. And sometimes people, it's very hard to differentiate, right? So which is which? How much of it is COVID? How much of it is the organic
It's
growth?
actually
Right?
like real growth, because COVID could have just accelerated some of that
Yeah.
growth because of the
Correct. But they say that because of COVID, that's why they cut down their expenses, right?
Right.
Yeah.
So basically, I think it's important to point out that you don't just look at the headlines and read, just the news articles and just look, oh, it's only a group, it's only valued at 30 times earnings, which is tremendous for such a tech unicorn at this scale, right? I don't think it's going to anything as big anywhere else so far at this point. So that's 30 times earnings for that is just incredible. But so like what Victor is has shown us is that you really need to take a look at the numbers, have a look back in time, and just see what are the more stable measures of the profitability and all that, and then you kind of get a more stable measure of what the PE should be, and it's about like you're saying, about 80 times earnings. And I think, what do you think? That's still, and like you're saying, there's still kind of a reasonable valuation for a company that's growing.
If they can maintain the growth.
If they can maintain it. Right. So and I mean, no one can know what's going to happen in the future, but it looks like, and there's a lot of potential.
It's exactly like when Facebook IPO at 100 times, but they grow 50% for the next 2 years and becomes it looks cheap already. Right? When they IPO, it looks expensive, but because of the growth, we cover up the valuation.
So the most important thing is ultimately they need to be able to maintain that growth.
Yes, correct.
Yeah, not just.
So I think that the lesson comes back to is that before you invest, you really need to understand the business. Because if you don't understand the business, then you can't really put your finger on whether this valuation is fair or not. Because a number is just a number, 30, 50, 100. You don't really know anything. There's no context to that.
Correct.
Right? Even if you compare it to historical measures, it's just comparing numbers to numbers. But when you kind of like understand what this business is all about, where Ant's potential is, where the growth could come from, and you can kind of make like a decision whether this is fair. And so I think for me personally, I think 80 times earnings is actually quite fair for Ant. That's my personal opinion. There's no recommendation or anything. And I don't even know how to get into the IPO myself at this point in time. But what do you guys think? Do you think at this valuation, using the more conservative valuation that Victor has pointed out, Rusmin and Kenny, what do you guys think about the valuation yourself?
I think the valuation looks attractive at a first glance, but after dive deep, it's still quite reasonable based on the growth that they're actually growing. Because if they are telling me that it's 30 over times PE at a growth rate of 40-50% a year, that is like a no-brainer.
That's a no-brainer.
That's a no-brainer.
So at this stage, of course, I look at it fairly okay, and because all the segments are actually growing very, very fast. So I think it's still quite decent, fairly reasonable.
At 80 times earnings,
70, 80 times, because the kind of growth rate they are growing is really crazy.
And I think it's also worth paying a high multiple because there's a lot of certainty behind this business because it's part of the financial ecosystem in China. And also you can think of Alipay as almost like an e-commerce platform for financial products, one of the largest e-commerce platforms. So anyone who wants to sell financial products, going through Alipay is perhaps one of the best way to reach out to
so you're actually not investing in kind of like a small company that has a lot of potential, may or may not happen, but this is actually investing in kind of like the number one player. Like you're saying.
So I agree with Kenny. It's like you got your digital payment number one, you got your online credit tech number one, you got your investment tech number one, you got the InsureTech number one. So basically, you're not buying a startup.
You're buying a stalwart. Right? You're buying the market leader. In a sense.
This is truly a unicorn, that's making money. Not like Uber when they list, not making money. Tesla not making money, and
all
it's like
those
solid.
Cloud business that are now when IPO they become very popular, and they're all loss making.
Cash flow. There's cash flow also losing money, for all those cloud business.
So Ant Group looks really good, but I don't want to get carried away.
Correct.
I mean, because for any business, anything, there's always some risks.
Yes,
right?
correct.
For any business. So what are some of the risks that we have to like look out for when it comes to looking at Ant?
I think the recent risk that came out in the newspaper is the Chinese government, right, actually came up with a new regulation for the funding, right? So which will affect their credit tech business, which is the one that's growing very fast. Okay. So what happened is that now the government tightened the regulation, say that the funding right must be about 4 times the company's net asset.
Okay.
So if you look at Ant, right, it's about 4.7 times. right? So
Okay.
they are above the limit already.
Okay.
Okay, so but I think they also knows that they are above the limit. That's why they also are planning to apply a new financial holding license for through one of their Zhenjiang Finance Credit Network technology unit, right? So by doing that, they can lower the cap,
Okay.
right?
Yeah, they also I think capping the loan interest rate to about 15.4%.
Yeah.
So there are actually a lot of regulatory
Yeah.
risks when it comes to finance
Correct.
industry, not just in China but in the rest of the world.
Yeah, correct.
Right. So and they also I think central government has used in the past to so-called limit the size of the transaction that they can carry out in Alipay.
Yep.
Yeah. So I mean regulatory is going to be the main risk, and of course they also have this Zima credit rating system where. They actually will rate their profile, but now the regulator says that I'm going to combine all of you together with Ping An, WeChat rating into one, because if you are rating a credit rating company at the same time you are the one that lending out the money, there is going to be a lot of conflict of interest,
okay,
right? You
yep.
can't just rate and then of course if you want to lend out more business you can
Just read them well.
rate them well,
Yeah,
right?
yeah.
So now the Chinese government is actually stepping in, which is also a good thing because you don't want them to have this kind of conflict of interest, right? So regulatory is evolving and
Yes.
we don't know how
Yeah.
much that is going to change down
Yeah.
the road as well.
So the credit tech growth about 60%. So if you based on this regulatory, moving forward maybe slower.
So it's basically this all
Yeah.
these regulatory requirements will basically
Yeah.
put a handbrake on their growth.
Correct.
Because you just can't just do as much business. You gotta
Yeah.
be more stringent in the way
Yeah.
you lend money and
Yeah.
you cap certain things and all
Yeah.
that.
So if you want to be conservative 60, you just cut about 20 or 30%.
All right.
Right,
So
off it.
Yeah.
any other risks?
Another big risk that I am actually looking at is going to be the electronic renminbi, e-renminbi they
okay.
call it, right? I mean, Chinese government has been testing this virtual currency that is dominated under renminbi. It's almost like a Libra that is actually done by so-called proposed by Facebook, that is backed by Euro, US, right?
Okay.
But Chinese government is coming on their own version of e-renminbi. So essentially, what is going to happen with this technology is that Chinese people can actually make payment from one person to another without an internet connection.
Okay.
So it's almost like I pay you cash and without any intermediaries in between because I can settle it within offline, right?
Okay.
But they are trying to run a similar system that you can pay someone digitally, e-money, without going through the internet, right? So I'm not sure what kind of technology they are using, but so
Okay.
far they have rolled out. They are doing trial in certain cities like Shenzhen, Suzhou, and Chengdu. Right, and the trial already began in May 2020, and chances are high that they may roll out by the end of the year. I mean, this is the expected date that they're going to roll out.
Okay.
Yeah.
So this could be competition for
Yeah.
basically Alipay and all that.
Yeah, we don't know how that is going to change the payment behavior among Chinese users, but I would like to believe that Alipay is no longer just an electronic payment, right? I mean, we've gone through the whole
There are
thing.
other things, yeah.
They are a super app where you can do a lot of things, and humans generally we are very used to, I mean, we are
Habits,
Yeah.
creature of habit.
creature of habits, and it may take time to change, but again, this is a risk that you need to watch out for.
Because it's backed by the Chinese
Chinese
government,
government,
right? It's
yeah.
not just a private enterprise trying to scale in China. This is the government itself
Yeah.
that wants to create
Virtual
its
currency.
own network
Yeah.
for its own
Yeah.
citizens.
It's almost like a blockchain, except that this is a centralized blockchain managed by the Chinese government. It's not those kind of like Bitcoin where this is centralized. There's no person in between. Yeah, but this is managed by the government.
That's pretty interesting. So I think, but that could be, we don't know when or how that would turn
Yeah.
out, or
Yep.
how many
Yeah.
years and all that.
Yeah.
But that's basically one risk that people will have to.
Then you have to consistently keep a lookout.
Yeah.
Yeah.
Okay. So I mean, these are some of the risks. Any other risks, if there are any more that you want to highlight at this point?
I think
Yeah,
that's
These are
there are
the
many
main
more
ones.
risks, of course.
Like any business has many risks.
I think these two are the more significant one.
All right. So if you're going to have a look at Ant, these are the things that you need to look out for. A lot of potential, a lot of growth, but then these are the risks that you need to take note of. I think it's important to always know that what your downside is, because you don't just want to look at don't get all excited and think about what your upside is going to be like, because then you kind of forget what the risk that you have as well. So I think I think we always usually when we do a discussion like this and we discuss a particular company or stock, and we usually end this off by asking, would you invest in Ant? Right? So I mean, not a recommendation by myself, anything like any of our other videos, but if you could participate in the IPO of
Yep.
Ant Group, would you participate? And I don't know how to do this at this point. We're still trying to find out.
Yeah.
Would you participate?
I think I don't mind participating.
Okay.
I mean, you don't buy so much stake, you just buy a small stake.
Okay.
Yeah, I will probably give it a miss. I mean, because whatever that we discuss in this video is just scratching the surface actually.
Yep.
I mean,
Okay.
Ant
Yeah,
Financial is big and you probably need a lot deeper, you need to go and study. And the prospectus itself is about 600 over pages, right? You might want to go through them before you decide whether you want to invest in that. But personally, I'll probably give it a miss. And once they get listed, if let's say once I done my homework, I probably can consider and buy it off the market instead.
That's a good
Yep.
point. Yeah. What about you, Kenny?
Yeah. Well, if I've done my homework and I can get pre-IPO, I mean that'll be great. but I mean, aside from that, right now everyone's so excited for me. I'll just if I can't get like the IPO price, I'll just wait and see and wait until the dust settle and to enter. I mean, there's no rush into something and eventually buy it at a high price to lose it, right?
Yeah.
I mean, like,
I think.
But anyway, if you look at a lot of the IPOs, most of the IPOs at a high, maybe like 80% of the IPO, when the IPO, they tend to drop down a bit, and that's where you can scoop up if you want.
Okay.
But there's always 20% who always just keep going up.
Well, this is the US market, is it?
Yeah.
That's the US market.
Yeah.
Chinese market is a little bit different, especially
Yeah.
they're going to list it in the star market, which is a lot of the companies over there are listed at trading a multiple of more than 100 times earnings.
Yeah.
All the tech companies.
So I think that's a good point that Rusmin really brought up, because you don't just want to get excited about a company. I mean, Ant looks great, with all its potential, but we don't really know everything about it, especially because it's not listed, right? It's not been listed. It doesn't really have a track record that you can review over the last 5-10 years. You're basically investing in something that based on the prospectus that they give you, and you based on that, and you got to read 600 pages of that and then you make a decision.
And some people may not be comfortable with what Jack Ma has done previously, right?
Yeah. I mean, there's
and financial, whether it's really going to happen again in the future, is anyone guess?
Yeah. So management is a key component of your analysis as well. So I think, usually when we talk about IPO stocks in general, we don't invest in IPO stocks ourselves because we don't know enough information about them. But in this case, it's just that Ant is such a big company with a lot of we've gone through the video, you know exactly what Ant is. So it's kind of like different to a regular IPO. So this
But there's no doubt, I think the future is bright for Ant Financial. As what Jack Ma always says, small is beautiful, right? So
that's why you call it Ant.
So and a lot of big shots like Temasek, they are all going to subscribe more to the IPO share. Rumor says that.
Because I think they generally will benefit from the big trend, right? As Chinese become more and more affluent, and then as China focus on more on domestic consumption, that is just a idiot-proof, I believe, idiot-proof way of investing. They think like, as long as the trend continue and it's clear that it's continuing, moving in the direction, then why not invest in something like that that will benefit?
So in any case, always do your own homework, do your own due diligence, make your own investment decisions. And everything that we share with you is just just for your information to find out more, and then you still need to do your own due diligence all the time. All right, so thank you so much, guys. I think this was a really good discussion because I think Ant is a really exciting IPO. Everyone's covering it at this point in time. All the news media is covering it. It's going to be a huge IPO. We don't know when it's going to IPO yet, right? The date has not been set. But it's on the line, and I think it's going to happen pretty soon.
It could be launched if by the time you watch this.
So who knows? And but thank you so much once again. So once again, I have Rusmin, Victor, and Kenny. Thank you so much, guys.
Thank you.
My name is Adam. So we're all from the Fifth Person, and thank you for joining us on this discussion. So if you really liked it, just put a hit the like button on this video, subscribe to our channel, because we have many more roundtable discussions coming up along the way whenever we discuss things that are happening in the in the markets right now.
Any points that we missed out during discussion, feel free to point out in the comment section below. We'd love to hear from you.
We can't be. There are experts out there as well. I think maybe you might be an expert in this. Feel free to share your comments and your views, and we keep this discussion going on in the comment section below as well. And we will reply to some of your comments and questions.
And subscribe.
And subscribe. So subscribe to our channel. We really appreciate you being part of this channel. So once again, thank you so much.
Thank you so much.
We'll see you around.
Thank you.
See you.